Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the relevant and important finance current affairs and the RBI notifications which are important from your exam point of view. So good morning everyone, and today we are going to discuss a very important notification of the Reserve Bank of India that has been recently released, that is in regards to the margin for the derivative contracts. So the Reserve Bank of India has released the reviewed guidelines for the margin for the derivative contracts. So the RBI has eased the FEMA regulations to facilitate the foreign investment in the derivatives. So this we are going to discuss, that what is the margin management of the derivative contracts and how it has been made easier. So let's get started, but before that, do subscribe to the YouTube channel of EduTap and join our Telegram channel. In the Telegram channel, you are going to get the PDF of today's session. So the PDF of the session will be provided in the Telegram channel, and the link for the Telegram channel is provided in the description box below. Okay, now this news article that we are going to cover, it is very important from the objective point of view of the examination for the phase 1 and phase 2 of the examination. So we are going to discuss the margin for the derivative contracts. Okay, so the instructions on margin for derivative contracts, they have been reviewed by the Reserve Bank of India based on the feedback that the RBI has got from the market participants, and the Reserve Bank of India has released the RBI Margin for Derivative Contract Directions 2024 after the review that the RBI has undertaken for the margin for the derivative contracts. Now, what is this margin? What is this derivative contract? So first, let's understand the meaning of the margin and the meaning of the derivative contracts. Okay, so derivative contracts, they are the financial contracts to be settled at a future date. Okay, so derivative, they derive their value from some underlying asset. Okay, so derivatives, they derive their value from some underlying asset that can be stocks, that can be bonds, commodities, market indices, the interest rate, currencies, etc. So a derivative is a financial contract. You can understand it is a financial contract that you are saying that right now I have rupees 10,000 and on 15th June, that is after 1 month, I would require $100. So I want to give my rupees 10,000 for $100 on 15th June. That is on a future date. You want to transact in the foreign currencies. You want to give your rupees to get the dollars. So that is a derivative contract. A financial contract will be made that Miss Kritika wants to give rupees 10,000 for rupees 100. Let's say Mr. David wants to sell his $100 for the rupees 10,000. So a contract has been created in between Miss Kritika and Mr. David. So this is a financial contract. So this is a derivative because it is for a future date. It is a financial contract that is getting its value. The derivative is a financial security. It is a financial contract with a value that is reliant upon or derived from some underlying asset. Here the cases of the currencies. Okay, here the value is derived from the currencies. Similarly, let's say after 5 months you want to get 100 shares of Reliance Industries. So right now you are making a contract that for rupees 2,000 per share, I want to buy the shares of Reliance Industries after 5 months, and 100 shares will be bought by me. Okay, so that means for 2 lakh, you will buy the 100 shares. So this is a derivative that is deriving its value. From the underlying asset, that is stocks or shares here. So I hope you have understood the basic idea of derivatives. They derive their value from some underlying asset. It can be gold, that after 5 months you want to purchase the gold for a particular amount. Okay, so here the derivative means a financial contract to be settled at a future date, and they derive their value from financial variables such as the stocks, bonds, okay, or the interest rates and such, or the non-financial variables such as the commodities, such as the gold or other agricultural commodities may be there, or some other commodities. Okay, now coming to the margin. So as per the norms that have been released for the margin for derivative contract, there is the particular definition that has been given by the RBI in regards to the margin. So what is that definition? So margin is actually a collateral that the parties to a derivative contract post with or collect from each other. So Miss Kritika and Mr. David. So we are the parties in this derivative contract, in this financial contract, Miss Kritika and Mr. David. We are the two parties in the derivative contract. So margin means the collateral that the parties to a derivative contract, the parties to a derivative contract has to provide to each other or has to collect from each other. So I will provide a margin. Let's say I am providing the margin that is of government securities that I have of rupees 2000 worth. Mr. David is also providing the government securities of the central government that is of worth rupees 2000 or $20, let's say. Okay, so that is the basic idea, that Miss Kritika has to provide the margin, Mr. David has to provide the margin, that will be working as a collateral. That what if Miss Kritika does not follow the contract and does not provide the 10,000 rupees on June 15th, or what if Mr. David default? So what if any of the party defaults? So for that, there is the margin that has to be collected, there is the collateral that has to be collected to cater to the loss or to cater to the default situation. So margin means the collateral that the parties to a derivative contract has to provide to each other or has to collect from each other, whether directly or through a third party, or there is a party that can be involved between the two, to cover some or all of the credit risk, or some kind of risk has to be covered in between the parties. The default risk has to be covered. So to cover the default risk, there is the collateral that has been posted, there is the margin that has been posted. So that the provider of the collateral. So that is the basic idea, that both the parties of a derivative contract has to put some collateral out, has to provide the collateral and has to collect the collateral. So Miss Kritika is providing the collateral and is collecting this collateral. Similarly, Mr. David is providing the collateral and collecting the collateral also. So that is the basic idea. So the circular number 10 dated February 2021 on margin for derivative contracts. So in 2021, there was the release of this guidelines on the margin for derivative contracts. They were issued to allow posting and collection of margin for permitted derivative contracts. So what are the permitted derivative contracts? So they are the foreign exchange derivative contracts. So for the foreign exchange, there can be derivative contracts for the interest rate derivative contract as well as the credit derivative contracts. So these are the permitted derivative contracts, okay, or any other derivative contract as may be specified by the Reserve Bank of India. So in 2021, there was the guidelines that was released by the Reserve Bank of India on the margin for derivative contracts that were issued to allow posting and collection of margin, that the parties can post the margin and can collect the margin for permitted derivative contracts between a person resident in India and a person resident outside India. So margins will only be collected by the parties. Margins will only be collected by the parties themselves if a person is resident in India and the other person is resident outside India. So Miss Kritika is a resident of India, Mr. David is a resident of US. So if the trade is happening, if the derivative contract is in between Miss Kritika or the person resident in India and the Mr. David, that is a person resident outside India, then only the margin will be collected by the parties themselves. Otherwise, it is the exchange that collects the margins, and the exchange or the third party in India, that is usually the central counterparty, they collect the margin. But if a person is resident in India and the other person is resident outside India, in this case, the parties themselves have to collect the margin, okay, for the permitted derivative contracts. So instruction on margin for derivative contracts have been reviewed based on the market feedback, and the new directions have been released. That is the margin for derivative contract, the new directions have been released, okay. The directions contained in this circular have been issued under section 10(4), 11 subsection 1 of the Foreign Exchange Management Act of 1999, and are without prejudice to permission, approvals if any required under any other law. So simply the circular that has been released by the Reserve Bank of India is under the FEMA Act. Okay, so now what does the margin actually contains? Okay, margin should be only in the form of securities or only in the form of cash or what? So that you will understand, because there is the list that has been given by the Reserve Bank of India that what can be kept as collateral between the parties or what can be kept as the margin between the parties. So we will understand that. But before that, how the parties are interacting with each other. Are they collecting the margin themselves? So actually it has been said that there is the authorized dealer, because a person is resident in India and the other person is resident outside India. So for the purpose of this direction, we will be focusing on the authorized dealers. And in this direction, authorized dealers actually mean the authorized dealer category 1 banks. So authorized dealer category 1 banks, they are the highest level of authorized dealers that are allowed to transact or that are allowed to convert the rupees into the other foreign currencies and the foreign currencies in rupees for all the current account and the permissible capital account transactions. So authorized dealer category 1 is the highest level of authorized dealers that can convert the foreign currency into rupees and rupees into foreign currency. Okay, so these are usually the banks. Then authorized dealer category 3, especially the standalone primary dealers. So primary dealers, they can undertake the deals or they can work as a buyer to the seller and seller to the buyer. So for the purpose of these directions, on the margin for derivative contract, the authorized dealers shall mean authorized dealer category 1 banks and the authorized dealer category 3 standalone primary dealers. Okay, so this is the different categories of authorized dealer that have different functioning, but the authorized dealer category 1 can function and can convert the currencies, rupees into foreign currency and foreign currency into rupees for all the capital, all the current account and the permissible capital account transaction. Category 3 authorized dealer are the select financial and other institutions such as the primary dealers. The authorized category 3, category 3 authorized dealers are they include the primary dealers that are authorized to convert the rupees into foreign currency and the foreign currency into rupees to carry out specific foreign exchange transactions incidental to their business or activity. So you can understand that the category 3 authorized dealers that include the standalone primary dealers, they carry out the specific foreign exchange transactions that are incidental to their own business activities. Okay, so category 1 authorized dealers can undertake all the foreign exchange transactions for all the current account and capital account transactions, but the category 3 authorized dealer that include the standalone primary dealer, they can carry out the foreign exchange transactions that is for their own business purposes. Okay, so now coming back to the margin, after understanding the authorized dealer in this circular will mean the authorized dealer category 1 banks and the authorized dealer category 3 standalone primary dealers. So now authorized dealers, that is category 1 banks and the category 3 standalone primary dealers, they can post and collect the margin in India and outside India on behalf of their customers. So let's say Miss Kritika is a customer of SBI. So I do not have the means to collect the margin from Mr. David. So I will ask SBI to collect the margin from Mr. David. So SBI, being the authorized dealer category 1 bank, will collect the margin on my behalf. So the authorized dealers may post and collect margin in India and outside India for a permitted derivative contract enter into with a person resident outside India. So I am the customer of SBI. I have entered into the contract with Mr. David. So the SBI on my behalf can collect or post the margin in India or outside India, okay, and receive and pay the interest. So if I have a government security and I am providing this government security as a collateral, so interest should still come to me only, because I'm like, the government security is mine. let's understand that you have kept your house as a collateral. You have kept your house as a collateral. So the rent that is coming from that house, does it goes to you or does it goes to the bank? Can you tell me? Does it go to you or does it go to the bank? The house that you own, you have kept it as a collateral with the bank to take a loan. So the rent from the house, is it going to you or to the bank? The rent from the house, tell me, is it going to you or to the bank? So similarly, so the rent is going to you. Yes, very good. So the rent is going to you. Similarly, the government security that is owned by me, I have given that government security as a collateral. But still the interest should come to me. Okay, so that is receive and pay the interest. So I will receive the interest on the government security and the authorized dealers can pay the interest to the concerned authority. Okay. So post and collect margin in India and outside India for derivative transactions that is of their overseas branches. Let's say that SBI has its overseas branches in US. So for its overseas branches also, it can post and collect the margin in India and outside India for the derivative transactions. Or let's say SBI has the IFSC banking unit, it has the IBU in the IFSC. It has the IBU, IFSC banking unit. So for that also, it can post and collect margin in India or outside India, and it can receive and pay the interest on such margin also. The margin can be in cash. We will understand that what are the categories of margin. But margin is nothing else. It is the collateral that the parties of a derivative contract has to provide or has to keep it with themselves or has to collect from the other party. Okay. So now, margin posted and collected in India shall be in the form of what? If the margin is collected and provided in India, so it shall be in the form of Indian currency. In India, we accept Indian currency, right? Freely convertible foreign currency such as the dollars, euros, yen, yuan, and the pound sterling. So they are the freely convertible foreign currency, we can say. Debt securities issued by the Indian central government and the state governments. So they are issuing the government securities. So that can be accepted as margin that is posted and collected in India. Okay. Certificate of deposit. So I hope you know and you have studied this in the static part, that the certificate of deposits. Let's say that you have a FD, you have a fixed deposit for a period of 6 months. Now you do not want to break this fixed deposit, but you can collect a certificate of deposit against this fixed deposit from the bank. So certificate of deposit can be used as a margin. Okay. And if Miss Kritika own this certificate of deposit, I have given this certificate of deposit as collateral, but the interest should come to me only. So that is the idea, right? So certificate of deposits. Next is commercial papers. So the commercial entities can release the commercial papers. Okay, one point that the certificate of deposit should be for the deposits that are of less than 1 year. That is the normal criteria. You can search it also. Okay, so read about the certificate of deposits. Coming to commercial papers, so they are like the promissory notes that I am taking your money, will return it back, something like that. So which are assigned a minimum credit rating of A1 issued by a rating agency registered with the Securities and Exchange Board of India. So the margin that can be provided or collected in India can be in the form of commercial papers that have got the credit rating of A1. Okay. From the credit rating agency that is registered with SEBI. If different ratings are provided with different credit rating agencies. So one credit rating agency has provided A1 credit rating. The other credit rating agency has provided A1 plus credit rating. So the lower or the lowest rating will be selected, will be taken. Okay. So if different ratings are accorded by 2 or more credit rating agencies, then the lowest rating, that is A1, shall be reckoned. But the minimum credit rating of a commercial paper that is posted and collected as a margin in India should be A1. If the credit rating is below that, then this commercial paper cannot be kept as margin. Okay. rupee bonds issued by persons resident in India which are listed on a recognized stock exchange in India, that can be the margin in India, or the rupee bonds issued by persons resident in India, they are listed on a recognized stock exchange in India, as well as they are assigned a credit rating of AAA issued by a rating agency registered with the Securities and Exchange Board of India, and if two or more credit rating agencies have given the credit ratings, so the lowest of the credit rating will be seen, that which credit rating agency has given the lowest rating, and that lowest rating is AAA or not. If it is not AAA, if it is lower than AAA, then this rupee bond cannot become the margin. Is it clear? Yes, imperfect, correct. Yes. Understood? So these are the margin that can be posted and collected in India by the parties that are involved in a derivative, in a permitted derivative contract. Now, margin posted and collected outside India. So as we have discussed that the margin can be posted and collected in India as well as outside India for the permitted derivative contract. Okay, authorized dealer may post and collect margin in India and outside India for their customers or for their own overseas branches or for their own IFSC banking units. So let's understand that if the margin is posted outside India, so what can be the form of the margin? So only two are allowed, that is, one is freely convertible foreign currency, that is the dollars, euro, yen, yuan, pound sterling. Okay. Next, debt securities that is issued by foreign sovereign, that is foreign governments, with a credit rating of AA minus and above, issued by the S&P Global Ratings or Fitch Ratings, or A3 and above issued by Moody's Investors Service. Okay, if different ratings are given by different or multiple credit rating agencies, so the lowest rating should be reckoned, should be seen for issuing the margin. So margin that is posted and collected outside India shall be in the form of either the freely convertible foreign currency or the debt security that is issued by the foreign government that has a rating that has been described by the Reserve Bank of India. So this is the main idea of the margins that we have discussed. Now last point that you have to see is that in case the authorized dealers are choosing to comply with the margin requirement of a foreign jurisdiction, that is, this is the margin requirement that we have studied, that this is the margin requirement that is in our country. For our that has been said by RBI, that if you are collecting or posting the margin in India, they should follow some rules. If the margin is posted and collected outside India, if you are following the rules of RBI, the margin should be in the form of these. But what if you follow the rules and regulations, you follow the margin requirements of a foreign jurisdiction that is given by the foreign authority? So for the non-centrally cleared derivative, this can happen. So non-centrally cleared derivatives, they mean the derivative contracts whose settlement is not guaranteed by a central counterparty. So usually the central counterparties are the buyers for the sellers and are the sellers for the buyers. So they are the third party that is in between the seller and the buyer, and the central counterparty guarantees the trade. And the central counterparty usually takes the margin. But here, if the central counterparty is not guaranteeing the trade, okay, so in this case, the non-centrally cleared derivative mean the derivative contracts whose settlement is not guaranteed by the central counterparty. So these NCCD transaction between a domestic covered entity and a foreign covered entity, that is person resident in India and person resident outside India. So Miss Kritika and Mr. David, they are under the NCCD. So they are doing a non-centrally cleared derivative transaction. Okay, so that is, they may be subject to margin requirements in a foreign jurisdiction. So they may accept the margin requirements of a foreign jurisdiction. Let's say I am saying that I will follow the margin requirement that is of the US. US, or that is acceptable in the US. So that is allowed for the NCCD or for such transactions. Okay. So in case the authorized dealers choosing to comply with the margin requirement of a foreign jurisdiction for non-centrally cleared derivative transactions with a person resident outside India. For sure, one entity should be person resident outside India or a foreign entity. Then only this whole margin works. Okay. Or for NCCD, that is transactions between two authorized dealers. So NCCD can be the authorized dealer 1 and authorized dealer 2. So they are doing the NCCD transaction. Okay. So if the two authorized dealers, authorized dealer 1 and authorized dealer 2, they are in the NCCD transaction, then also they can say that we will follow the rules of the margin requirement of a foreign jurisdiction and we are not following the rule of the margin requirement of the RBI. They can say so. They can say so. But in this case, are they both present in India? So how they can not follow the rules of the RBI? So at least one of the authorized dealer should have a foreign branch or should be in a foreign country. Then only they can say that we will follow the rules of the foreign jurisdiction. Okay. So at least one of the authorized dealer shall have a branch, is a branch of a foreign bank. That means that this authorized dealer 2 is actually the branch of a foreign bank, is actually a branch of the foreign bank, and that's why it is claiming to follow the rules, the margin requirements of a foreign jurisdiction. Then the RBI will allow so. Okay. So that is, if you are trading with a person resident outside India for the NCCD transactions, then you can follow the margin requirements of a foreign jurisdiction. Or if the two authorized dealers are trading in the NCCD, at least one of the authorized dealers should be a branch, is a branch of a foreign bank, then they can follow the norms, margin requirements of a foreign jurisdiction. Okay, so that is the idea. Then they can follow the margin requirement of a foreign jurisdiction. So authorized dealer may post and collect margin outside India and receive and pay interest on such margin in the form and manner permitted by the laws and regulations of the foreign jurisdictions under this, as well as posting and collection of margin and receipt and payment of interest on such margin may be undertaken by the authorized dealer or by its overseas branches or head office as part of the global margin arrangement. So this is the basic idea, that especially remember, let me summarize this, कि NCCD in transactions के लिए, for these transactions, if one person is from India, the other person is from outside, then for these transactions, the margin requirements, rules can be followed of the foreign jurisdiction. Or if we have the two authorized dealers that are trading in the NCCD, but one authorized dealer is a branch of foreign bank, then also the margin requirement can be followed of a foreign jurisdiction, and as per the law and rules of the foreign jurisdiction, the margin will be posted or collected. Or as per the global margin arrangement, the posting and the collection of the margin as well as the interest will happen. So this is the basic idea. I tried to break this down as much as I can. It took me a lot of time also to collect all of this information, but I hope you are able to understand this. Now the last point of this margin requirement norms are that the authorized dealer category 1 banks shall maintain a separate account in the name of the persons resident outside India for the purpose of posting and collecting the cash margin in India. Okay. So the basic idea is that if the margin collection is happening in India, the posting and the collecting of the margin is happening in India, that is, you are providing the margin and collecting the margin in India only. So that means the resident outside India, the person that is outside India, for that you have to first open a separate account in India. Okay. So authorized dealer category 1 banks shall maintain a separate account in the name of a person resident outside India for the purpose of posting and collecting the cash margin, especially the cash margin, because the government securities or any other the certificate of deposit or the commercial paper can be sent directly. But in the case of cash margin, if you are collecting the cash margin in India, first open the account, separate account in the name of person resident outside India. Okay, so that is the last criteria. Now before discussing the homework questions, I want to show you something. So there is an initiative, a very big initiative that has been taken by the EduTap. So if you go and if you type the edutap.co.in, so you go to this website, okay, you will get this page. Okay, here in the free material, we are providing you the blogs. You go to the blog and let's say you are going to the nearly end of the page. Here you can see that the exam information, the job profile, the strategy for the examination, the courses, the success stories, everything is provided to you so that you can better understand the requirement of the examination. So if you are clicking on the exam information, if you want to see the exam information, particularly for the RBI grade B, then you can see all the exam information. The blogs have been written in a very detailed manner so that you can understand the requirement of the exam. If you want to know the strategy, okay, RBI grade B has been selected. So if you want to know the strategy, how to prepare government schemes, best strategy to crack the RBI in the week-wise strategy plan, day-wise strategy plan, as well as how to prepare current affairs. So the blogs have been written here. So success stories, if you want to know that how the people have cleared the examination, okay, how these people, what strategies they have adopted. So you can see that with working full time, if you are also a working aspirant, that working full time, how she was able to clear the examination, and such success stories you can see to understand that how they were able to clear the examination. Okay, so that is the basic idea of this blog. That is why this has been created. It has taken a lot of efforts from us to create these blogs, and they are absolutely free of cost. If you directly want to see in the categories, directly go to RBI grade B, you can see all the blogs. They have taken a lot of efforts from our team, but we have created this free of cost so that you can get as much material, as much free material that you can get. As well as most of the students have this problem that how to join the Telegram channel or how to get the PDFs. So here, join our Telegram channel directly. You do not have to search for the link or search for different things. You directly go to this website, the front page, the first page that is provided. So if you go to the website and if you click to the blogs, directly you can see at the end of the page, we have provided this join our Telegram channel so that you can get the free notes, the free PDFs that we are providing of the session. So you can join. Okay. So this is the idea. Now coming to the questions. So this is the first question. I hope you will be easily able to answer this question. Okay, I hope you will be easily able to answer this question, and remember the main points of this whole guidelines. Okay, and this is the second question, so try to answer this question also. Take the screenshot. This is a homework question, so try to answer this question. Okay, so now at the end there is an announcement from EduTap that we have also this complete guidebooks that have the comprehensive material to make you aware about the examination, the syllabus of the examination, the pattern of the examination. Even the previous year questions are provided with this guidebook that you can easily download, and this is absolutely free of cost. All these materials, the previous year questions and such, have been provided to you at free of cost. So you can just go to the description box and click in the description box, the link is given to download these guidebooks. Okay, that is absolutely free of cost. So now thank you very much, and I hope you enjoyed the session. Do go through the blogs if you want to get any clarity regarding the strategy, or regarding the sources, or regarding the success stories of the toppers. If you want to see that, so you can read the blogs. Okay, and do give me the right answer of the homework question if you have understood this margin requirement guideline. Okay, so this was a little complicated, but I have tried to break it down in simpler terms. So do comment down below that if you are liking these sessions, and give me the right answer of the homework question if you have understood everything clearly. So thank you so much. You are most welcome, Pratul. You are most welcome, Saurish. You are most welcome, Imperfect. With your sessions, the whole notification and master action becomes a cakewalk. Thank you so much, Shitish. Means a lot. You're most welcome, Nitya. You're most welcome, Padmini. So thank you all for attending the session and joining the session. So thank you everyone, and let's